Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and look at some potential action areas for the trading week ahead and some price targets that we can pay attention to. Before we jump into the technical setup, obviously want to review the macro side of things and where we are from the market narrative perspective. Coming into today, we have seen a 1.5% decline in the Nasdaq, and similar in scope, 2.5% in the S&P 500 E-mini futures, stabilizing a little bit here as New York comes online. But the sell-off has principally been driven by the developments over the weekend that DeepSeek, the Chinese AI initiative, have demonstrated the ability to produce generative AI models that are matching and exceeding ChatGPT on a significantly lower capex expenditure. So this has brought into question the huge expenditure that has been taking place in the US and Trump's initiative last week in terms of Stargate and the expenditure or investment initiatives there. And so the markets have been somewhat unnerved by this development during the Asian and European session. Like I said, we're stabilizing at the moment, and we will see now, obviously, as New York comes online and Trump's Twitter and Truth Social account probably gets fairly active today. So that's where we are in terms of the news that has essentially driven the moves overnight. In terms of the macro slate this week, we get consumer confidence in the US on Tuesday, the Fed decision on Wednesday, we get ECB and US GDP on Thursday, and we also get core PCE on Friday. And to add to the mix in terms of potential volatility for the week ahead, we also get mega cap tech earnings, 4 of the Mag 7 set to announce with Microsoft, Tesla, and Meta out on Wednesday, and then we get Apple as well on Friday. So we have significant volatility events in our scope in terms of the macro side of things as we trade through this week, and that's obviously kick-started by this DeepSeek news this morning. So looking at the technical picture, before we jump into the charts, just want to update the seasonal view. From posting this each week now. So we've got the 25-year look back on the S&P 500, and we are just looking at post-election years. And lo and behold, the model suggests, or the seasonality suggests, about a volatility here into the end of the month before picking up again to print a local high into that first week of February, which I referenced last week, before seeing a more significant pullback, looking then for a tradable low into the first week of March. So keep that in mind there, because this is tracking fairly well at the moment. Let's do a comparison. In 2025, you can see we've got that high into our target zone. We are pulling back. So we use the seasonality. Obviously, it's not going to match perfectly, but it gives us some additional confluence. Certainly, when the patterns start to align as they are at the moment, it's worth just keeping that in mind in terms of volatility and where we can see swing points in the market, because this one is tracking pretty well. We caught the local low into the midpoint of January, and it looks like we have a local high in place here, and we're looking for a pullback now into month end before potentially then getting the next leg to the upside. So with that in mind, let's jump into the technical setup. So on the weekly time frame, upside objectives versus our swing low, just above the 5800, 5812, is a 5 equals 1 at 63.55 on the upside. So whilst we maintain that low, that's the technical objective. We also have the larger 5 equals 1 objective at 62.31. So 62.30 to 63.50s are our upside objective versus our key swing lows that are in place. Certainly, we're paying attention to this 5,800 level. If that's breached to the downside, that will has the potential then to reset our target for our 5 equals 1 on this last leg to the upside. Noteworthy, we did get some significant momentum divergence that I've been referencing into that high on Friday, and then we have seen the subsequent pullback so far. At this stage, the weekly volume weighted average price is coming in at the 60-30 level. So to regain some momentum to the upside, we're going to need to close this week above 60-30. Anything below there will maintain pressure to the downside on the weekly scale and suggest that we have more work to do on the downside. Moving to the daily time frame, in terms of the implied volatility for the week and what we were looking at versus the gap lower that we saw in Asia last night. So from the Asian Open, 60.18 was the 60.19, sorry, was the downside target. We've obviously exceeded that in this swing to the downside this morning, and on the upside, 61.85. So it's about an 83-point swing was being priced in as of Friday, but obviously that will be updated today, and I will keep you abreast of implied volatility as we trade through this week through the updates I post on the Tickmill blog. In terms of my positions, you can see those below and the stops that I'm currently using on them. I did post an update onto the Tickmill blog this morning that highlighted I was looking initially at this 59.60 to 59.70 as a bull bear zone for the week. If we could find some support there, I suggest I would try a long, and that is what I have done this morning. Additional positions are listed there with their current stops. So in terms of the plan for the week, like I say, I was looking at this 59.60 area, 59.70. It's the high volume area on the 30-day look back here on the 4-hour time frame, and also coincides with the pitchfork projected ascending trend channel support. So what I'm looking for now is if we can defend the overnight lows now, we're going to look for a 3-wave corrective move to take us initially back in to test the halfway back for the current session, which coincides with the volume weighted average price. So we're looking at a 60.25, 60.30. So if we get up into that area, I'll be watching for the potential that we see another round of selling here to take us down to make another low, or at least a test of the lows. I'll be paying close attention to the 59.38 level. That's the value area low on this 4-hour profile. So if we get a move down into that area, certainly as we open up for the cash session, I'll be paying attention to that. If we make that new low and we find buyers step into the cash session, then we will see again about trading this to the long side, looking for another leg of corrective move to the upside. The key resistance now is going to be the gap, which or the Asian Open last night, which is 61.02, coincides with the value area high on this 4-hour profile. And you can imagine that there are traders who bought the gap down last night and are stuck there. So that will be a key resistance. Above there, we have the gap fill itself, which now comes in at 61.30. So those are key levels, key targets on the upside if we can get some corrective momentum going. Until we fill the gap, there is still the opportunity to take another leg to the downside. And certainly we can think about a retest of the 58.70s and then back down into that low that we made for January into the 58.11 area. Both areas I would consider tactical long trades, but like I say, until we get back above the gap fill for now, the focus is going to be on looking at another potential leg to the downside. So I'm treating this as an initial impulse lower, looking at any move to the upside as corrective, and then we're looking for another leg to the downside. If we can get back above the gap, 61.30, then that's 61.85 is going to be the next upside objective for this week. Certainly possible, given Trump's Trump's likely input on seeing a near 5% drop in the Nasdaq. That on the basis that he assesses his effectiveness as president to be tightly correlated to market performance. This isn't going to be a great scorecard for him to wake up to this morning. So we'll see. Expect continued volatility. I'm using slightly wider stops at the moment to account for that. So where I'm normally using a 10 to 15 point stop, I'm using a 20 to 25 point stop in this environment. And again, I'll update when I adjust that. When I adjust my stops again. But for now, with volatility, 1 point the VIX this morning trading about 20, you need to adjust position size and stops to account for that to continue to operate in this market environment. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.